Are you bullish or bearish for the U.S. economy?
From an investment perspective, very bullish from a quality of life. And I don't think it'll be the best country to live in for the next 50 years. I don't think it'll be the safest. I don't think it'll be the highest quality of life or the longest lifespan.
And you think Switzerland?
I think Switzerland's far better, yeah, for sure.
What about Japan?
Probably better, yeah. Probably better. Yeah.
I think we're going to see a lot of people our age retiring in other countries.
I think so too.
I think that's just the only way they're going to be able to do it. If you have $200,000 to $500,000 saved,
right,
and you're 60 years old,
nobody by the time they're 60. Like very few people get to that amount.
If you're lucky enough to have $500,000 saved at the age of 60, and you're done with work and you want to retire, and you lose your job because a robot just took it, you can go anywhere in the world and live a fantastic life on $500,000.
I totally agree. Yeah, there's a lot of alternatives. I think that's going to happen.
In terms of the U.S. economy, what are your leading bullish indicators?
In terms of an investment perspective?
Yeah.
Well, I think the same reasons that got us here in the first place. I think we'll still remain the world reserve currency. And I do think there will be a challenger. I think Jerome Powell even said that. He's like, it's okay. There's going to be probably two competing ones. There's probably going to be China's currency. It's going to be our currency. But as long as we have the world reserve currency, I think it will always squeeze asset prices up, no matter what, because we have the money printer. And as long as the world is still in need of those currencies, of those units, then we'll always export our inflation to the rest of the world. And with that money, they'll be buying our assets. They'll be buying our treasuries because they'll want an interest on it. And that'll push everything from equities to treasury bonds. That'll always...
What determines the world reserve currency? Is it just like who has the strongest military?
I would say that was a big part of it. Yeah, I think that definition is changing, obviously, which is why the dollar's losing dominance over time. Like, not to be that guy, but I'll show you that.
The dollar has had its worst year, I think, since 1972.
Yeah, 2025, we've lost 10%. And here's what's interesting. If, here, strong versus weak dollar, let's see. Oh, there we go. So in 2025, the Dixie Index, which measures the strength of the dollar in 2025, has lost 10%, which is kind of crazy. So what that means is, like, I opened up my investment account. I look at my stocks. So year to date on this portfolio, I'm up like 14%, which sounds really good. Like, cool. Like, that's great. 14%. That's not bad. But the reality is I'm only up like 4%, right? Because the dollar's lost 10%, which means if you didn't get a pay raise this year that was 10%, then you lost money in terms of purchasing power. So that $100 at the beginning of this year now buys you $90 worth of stuff. That's literally this year alone, which means we're all forced to participate in the market, which is another answer to your question, like why is the U.S. going to continue to go up? Because we are literally forced to put our money in these assets. If we don't, we lose purchasing power.
But here's the thing. I'm noticing in terms of daily purchasing power over the last year, you say the dollar's down 10%.
Yeah.
But I'm not seeing real estate cost 10% more. I'm not seeing groceries costing 10% more. I'm not seeing gas costing 10% more. I'm seeing a lot of those basically in line.
Do you go to grocery stores?
Yeah.
Where do you go?
Trader Joe's.
Trader Joe's?
Yeah. Why?
Well, that's not middle class. Trader Joe's. No, Trader Joe's is nice. I like Trader Joe's. Yeah. I thought you said Whole Foods.
No.
No.
Where'd you go? Erewhon.
Erewhon.
Yeah.
It's still the same price.
Dude, the $20 strawberry is still $20.
$30 per strawberry. That's funny.
I'm just not seeing everything rise by 10%. If anything, I'm seeing gas prices are down a little bit. Energy prices are more or less the same. I don't know, but maybe that's because I'm so isolated here in Vegas.
Potentially, yeah. I mean, I think we're definitely losing purchasing power over time. We're making more, we're printing more money. It's constantly something that's going to keep happening. One thing I actually found really interesting is, I don't know if you saw this. Did you see that? So Berkshire Hathaway, Warren Buffett's company, in the last 27 years, it's actually matched the price performance of gold. Look at this. So in the last 27 years, gold and Berkshire Hathaway, they've basically been the same.
So what does that tell you?
And then there's this one. So the total returns, it actually goes back to 25 years. This is just a 20-year against the S&P 500. So literally a shiny rock has outperformed all the smartest people on Wall Street, all the innovation, That's kind of nuts.
Sometimes I worry that these are very selective dates.
I thought you were going to say that, but like 25-year period. It's not like I was like, let's start right here and at a very recent time. It's 25 years worth of innovation.
But sometimes going back 30 years could change the picture quite a bit. Or when you look at it from 1978 to today, you get a bit of a different idea because gold, my understanding is that gold just hit its inflation-adjusted price as to what it was back in the 1980s.
Yeah, it's caught up for sure.
It's caught up. So if you invested in the 1980s, you would have the same amount of money today as you would back then, adjusted for inflation. And that's after, 40 years, 45 years, almost 50 years, we'll call it.
But
and you
still,
have the same amount of money as back in the 1980s.
But
if you invested at the peak.
Sure. But the most brilliant investor, like Warren Buffett, 25 years hasn't been able to outperform gold.
It does make me worry, too, that maybe Bitcoin could be one of those, of like, Bitcoin's version is the 1980s version of gold.
Right, where it doesn't do anything for 25 years. Right.
And then 50 years later, you're like, oh my gosh, it just hit $2 million.
Right.
It's inflation adjusted.
That
right? Like,
could totally happen. Yeah. I don't know what to draw from that conclusion.
Yes.
It's just like, that's kind of crazy to me, though, that a shiny rock was able to outperform some of the smartest minds in the world.
I think it's just the lack of confidence in the United States dollar right now is really contributing to that. And tariffs, I don't think, are helping confidence. And I think people just want a safe place to store their cash. And in terms of a safe place to put their money, stocks, investors feel like is overvalued. The dollar, they don't have faith that it's going to be worth the same 3 years from now. Bitcoin is a bit too volatile. Where do they put it now? Gold, silver, real estate, but even real estate is expensive relative to the current interest rate.
Right. And
so
also,
it seems like, yeah, it makes sense how it's
right.
gold.
And also interest rates are going down, which weakens the dollar. So, less demand from foreign countries to buy our treasuries. So that also weakens the dollar, which partially contributes to the 10% loss in purchasing power. It's a lot of things, yeah.
I'm curious, have you made more money investing or with YouTube over the past year?
So far, definitely YouTube, by far.
Definitely by far.
By far.
Have you ever had a year where you made more investing than YouTube?
Before YouTube.
Oh, yeah.
Before YouTube. But I hope it doesn't come across that way on my YouTube channel. I'm not like, hey, I'm the investment guru. You should follow me because I make more money. I think I'm pretty transparent about YouTube being my main source of income. But I think on a long-term scale, I think obviously investments will make a lot more money than YouTube. But investing just takes forever.
Yeah, but you can't compare the two. Like, even if you're in the market earning 8%, you can't compare that to like a job that you're working at 8 hours a day, 5 days, 6 days a week.
Yeah, I think most importantly, as long as I don't position myself and I'm not dishonest with people and I'm not like, hey, look at my portfolio and look how much money I have. You should buy my course because I know what I'm talking about. I hope I'm pretty transparent about that, and I don't think that should be a secret.